Sudan does have a little bit of oil, not nothing to really concern ourselves with, but they do have rare earth elements. So we know China, we know Russia is going to be involved in this conflict, and it seems like more and more we're getting this. I wouldn't call it a Cold War, but it's obviously a who the BRIC countries
Yeah,
are.
yeah.
Okay, it's right now it's shaping into like this world dynamic of BRICs versus the West.
Hey, we got Luke Burgess here with the Angel Research Podcast. I'm here today with Keith Kohl. Keith Kohl is the editor of Top Line Trader, um,
Energy investor.
Energy Investor, Technology Opportunity. You
Mhm,
also write for Energy and Capital.
mhm.
Is there anything else? You write a lot.
That's what I write.
So Keith, today we're going to talk about several things, but I want to start with lithium. So, talk to me about Chile and the lithium industry. Chile is nationalizing lithium.
So the plan right now is for the Chilean president announced he was going to nationalize the lithium industry. Um, just to give you a heads up, uh, Chile has the largest amount of lithium reserves on the planet at around 9.6 million tons. Um, they're the second largest producer, just behind Australia, I think. And so they're kind of doing, they want to take advantage of obviously EV growth, lithium battery growth. I think the IEA just reported that EV growth sales of EVs are expected to grow 35% this year. So in a way, it's kind of reminiscent of what happened to Venezuela. Um, but let me clarify that. So you know what happened in Venezuela back in 2006. Hugo Chavez nationalized the oil industry, and it was a complete
It
disaster.
was terrible.
It was absolutely disaster. But his goal or his reasons for doing so was because if you think back, this is before the shale boom. So oil prices were trading at triple digit prices. It was running up to that 2008 peak around, around $126 a barrel.
Yeah.
And so that was the initial like kind of catalyst as to why he wanted to take advantage of that because, governments are greedy. And so with Chile, I think that they want to take advantage of this push for EVs and lithium batteries are going to be the growth is supposed to be lithium demand growth between now and the foreseeable future. Go out to 2030, go out to 2050. Everybody's going to have their own strict bullshit targets that they're going to try and hit. Everybody.
But this is not a good idea. This is going to
No,
screw
no.
things
So
up.
this could be a good idea
Oh, it could be.
because
Okay.
so it was reminiscent of
Okay.
Venezuela, but what happened in Venezuela was a complete shit show,
Yeah, yeah, yeah.
right? It turned the state-run oil company through incompetence and just sheer poor management into an irreversible decline in Venezuelan production. So throw that out of your head. But the reasoning is sort of similar. The government wants to take advantage of the country's natural resources, right? And so it's not official yet, and they're still working their way through, but essentially they're going to create a state-controlled lithium company. Okay. And this company is going to have a hand in every single lithium project in the country. I think there's only two lithium producers right now in Chile. It's SQM and Albemarle. And so, I mean, two of the biggest lithium producers on the planet. So they're working with the companies to probably own like a 50.01% share of all the projects just so that they can have control. Um,
And this is not something that is unfamiliar to the Chilean government. They have nationalized the copper industry as well, correct?
right. Now that's going to be an interesting thing on how they implement this because if you remember back in 1971, they nationalized the copper industry. Is it called Coldeco?
Codelco.
Yeah, right. So that so it's sort of a similar blueprint that they're kind of using right now.
I see. I see.
Right.
So they are. I mean, like they're familiar with this. They know what they're doing. When do you think that they will do nationalize the industry? Is it near
So
term or
it's going to have to be near term.
because they want
I
to take
think I think I
advantage?
think President Boric is going to essentially get it run through. Um, He wants those tax dollars. He wants that revenue. He wants everything. But it's definitely an interesting um, play for investors because for me, I don't look at Chile. I'm looking at Argentina.
That's my next
So like
question. Who's
Allchem,
the
right?
winner?
Formerly Orocobra would probably be my favorite play in South America. Um, but there was something interesting in the president's announcement of this, and so he was talking a lot about new lithium extraction technology, right? So right now you get it through traditional hard rock mining. You get it through brine, these massive ponds of brine, um, which have their own issues because they take almost a year and a half to evaporate and get the metals out. And so he was talking about something about direct lithium extraction, DLE, right? And only a handful of companies are even exploring this technology. Probably the biggest lithium companies and a couple of juniors that me and you have never heard of. And what's interesting about this is that they can extract lithium from brines without the evaporation pool, like those massive ponds that take a year and a half to cultivate. And what's interesting is that this technology is completely untested, right? There was a pilot plant, I think maybe a year or two ago, that was out, but it's never been commercially proven. So a lot of people are like, this would be where the US would probably come in. So let's say direct lithium extraction is a real thing. Then that opens a door for a ton of investments inside the US. As it is right now, um, let's assume it doesn't work out, then the US is going to be in a lot of trouble because there's no way that we're going to even compete on a level without like lithium brine extraction doesn't really work in the US because of the climate, right? You need a very set sort of
Very dry,
right,
ultra
right,
dry,
yeah,
over large areas.
right. And so so it's a lot more restricted in the US, right? So you're not going to see as much growth if this doesn't get off the ground. And by the way, now we're talking like what, 5, 10 years in the future? Like this is going to be years away.
And we need this now,
Yeah,
not 5, 10 years in the future. Yeah.
right. And what's kind of interesting is it makes us look at other stuff like lithium recycling, where a company like Li-Cycle is actually commercially producing lithium right now from all your old iPhones and electronics, and which is just something that everyone should probably take a look into. It's been intriguing.
Is that profitable for them? Is that something that they're just testing right now?
It's currently commercially
Okay.
viable, if
Oh,
that makes
awesome.
sense. So they're growing. They have like these different like facilities, a couple facilities across the world. So that's pretty much the situation in Chile.
Okay, let's talk about Sudan. Now, you've been talking about Sudan a lot in Energy and Capital, I think.
I actually haven't mentioned it yet
Okay,
because
and
this
it's just
all
you and me,
happened like
just you and
last
me
week.
talking.
So we've
Okay.
been talking
Yeah,
about
yeah.
this, but we haven't said anything publicly. But so do you know the situation that's going on in Sudan?
Not a clue.
Not a clue.
Not a clue.
Okay. So let's rewind, right? Let's go back to 1989,
Okay.
right? Al-Bashir becomes the dictator of, for lack of a better word, for Sudan. And since the 80s, there's been a civil war going on, right? So we're talking like a 30-year civil war that sort of kind of played out by like, I think it was 2011 when South Sudan became an independent country from the Sudan. And so fast forward a little bit, you have al-Bashir ruling Sudan, and in 2019 there was a major popular uprising, right? And so he got overthrown by two of his generals. Now what you have to know is that there's these two generals. There's one who's in charge of the Sudan's army, right? We'll call him General Burham, right?
We'll just call him that. Is that his
Because it's
name?
his name, right? And then there's another general that is in charge of the RSF, which is basically a rapid support force.
Okay.
Okay, it's about 100,000 soldiers, so it's not an insignificant force,
Okay.
right? So this is General Degalo. Okay,
Okay.
so these two guys are very important, right? So these were the two generals that were under al-Bashir, and then these two guys got together and they basically threw him out.
Okay.
Okay, so now 2019 overthrow, coup d'etat, these two generals find themselves in charge, each in charge of their own independent army, right?
That's a recipe for disaster. I
Right.
can already see it.
So the U.S. and the EU were all for the change because we like to meddle in other governments, and so to keep face, the General Burham was basically the president in charge, right? And they created this kind of transitional type government, right? And it would consisted of the president, which was him, and his vice president, who was the General de Gallo, right? These two dictators were now in charge. And then there was a civilian component. Okay. So each one of these guys wanted to basically be the top guy, right? And you each have, it's really Game of Thrones ish, right? You each have your own armies, and so fast forward to about a couple years, and these guys just can't get along, and they can't figure out how to run this country together, right? So General Burham has this idea, and he's like, well, let's how about we fold the RSF, which is your army, into the Sudan army, which is my army. So the one guy is obviously like, well, that's a pretty bad idea.
It's a terrible
Right.
idea for him.
And so they're going back and forth. And this is just over and this is pretty recently, right? Until last week when just open war just started breaking out, right? That's when the US embassy was evacuated. Other governments are getting their people out. It's just in Khartoum, which is the capital, is just, I would imagine it's utter chaos right now. And so you got to think of the geopolitical fallout or impact from this. Like,
Because Sudan is a huge country. Is it Africa's
so
largest
it's
country?
I don't think it's the largest
It's
country.
not the largest
No.
population-wise?
But they do export almost $3 billion worth of gold every year,
Okay.
which
Now
is
you're
interesting.
talking my language.
Sure. Have you ever heard of the Wagner Force
I have not heard of the
in
Wagner
Russia?
Force.
It's like a paramilitary force from Russia. And so Russia sends this group down to help in Sudan.
Help.
So now they're being accused of just stealing gold, basically. Yeah. So, I mean, maybe you can weigh in on the gold situation there.
So anytime I'm looking for gold stocks and I see that a company is working in Africa, to me that is actually an automatic red flag.
It's almost like oil in Nigeria.
Yeah, it's a geopolitical risk that I don't have to take, so I'm not going to.
Sure. I mean, Sudan does have a little bit of oil, not nothing to really concern ourselves with, but they do have rare earth elements. So we know China, we know Russia is going to be involved in this conflict, and it seems like more and more we're getting this. I wouldn't call it a Cold War, but it's obviously a who the BRIC countries are.
Yeah.
Okay, it's right now it's shaping into like this world dynamic of BRICs versus the West. We have Brazil, Russia, India, China, and South Africa, I believe. So I think last couple of weeks there was an announcement that like 19 countries are looking to join BRICs, and they're kind of fighting this kind of war to undermine U.S. economic superiority. Right? They convinced Brazil to drop the dollar in exchange for I think for the yuan or local currency maybe. Indonesia just recently announced that they were doing the same thing. And so all this is being fueled by uh, the geopolitical chaos that's going on in Ukraine. So we're seeing like a shift in the global energy markets, right? So like you have obviously Europe that can no longer use Russian natural gas. So now they're actually overbuilding capacity for LNG, which is kind of funny because now they're being attacked by groups that want to see cleaner energy, or the kind of the failed green policies that got countries like Germany into the situation they're in right now. I think they just closed their last nuclear power plant like this month. But so countries like Germany are planning on massively building out their natural gas and LNG infrastructure, right? And they're actually overbuilding capacity, which is actually a really good thing. If you think about it from like an economical standpoint, the more supply you can get in there, the lower prices are going to come down to. And so what that's going to do in Germany is it's going to force wind and solar and other renewable energy to compete with ultra cheap natural gas. And I'll let you know it didn't work out well for that here in the U.S. when natural gas basically caused the death of the coal industry.
Yeah, yeah. So let me go back to Sudan for a minute.
Sure.
I think that it's pretty clear, and these BRIC countries who are waging war against the West, I think it's pretty clear why the money. My question, I guess, is why now? Is it because, like you said, Ukraine? Are they just sort of piggybacking off of
Well,
that whole like?
imagine I can't say for how long, but Russia has always wanted to put a military base in the Red Sea, on the like a port on the Red Sea in the Sudan, and this is now suddenly possible. So everybody's playing their sides, but it seems like everybody's staying out, like staying like from direct conflict. We're not going to send U.S. soldiers in the Sudan after the complete shit show that we did in Afghanistan and the Middle East over the last couple decades. Um, but you're going to see this BRICS faction start to gain a lot more traction in geopolitical events. So like Russia getting a military base in the Red Sea is huge for them, obviously, and apparently now that everybody hates Russia. So that would be a major significant event if they do that. China is currently trying to replace U.S. as the peace broker. They I think Xi just announced he was going into Ukraine to try to broker a deal between them and Putin. So we'll see how that goes. And meanwhile, the U.S. is just sitting on the sidelines. We're just sending tons, billions and billions of dollars and military equipment, but it seems like we're very lackluster in our ability to um, broker peace or even to talk to the other sides. It seems like U.S. foreign policy has isolated ourselves from not only the BRICS countries, but the countries that are helping, like, are fueling BRICS' growth. So like countries like Saudi Arabia, right? Um, so it's kind of like a bad secret. Like the worst kept secret is that Russian oil is not only selling for over the price cap, which the G7 price cap is $60, but they just basically took uh, the 20% of their oil that was going to Europe, they just shifted it to other markets like India and China, right into their hands. So while China and India are buying up as much of this cheap Russian oil as they possibly can get, you also take into account Saudi Arabia, which is second to the United States in terms of massive oil producing like country, right? So excuse me. So it's interesting that we're isolating all these countries, especially Saudi Arabia. The most recent stuff with Saudi Arabia is kind of interesting because the Saudis, prior to 2008, we were hopelessly addicted to Saudi oil, right? I think like half of our oil imports were coming straight from OPEC members,
Wow.
right? And so over the course of this shale boom that we've had, which pushed U.S. oil production up to 13 million barrels per day, we the Saudis kind of realized that we're no longer their biggest customer, and like every chance we get, if you take a look at say some of the Biden administration tweets and moves against the Saudis, they blame them for high energy prices. They blame them for oil prices, high gas prices. Everything is somebody else's fault, right? Have you ever noticed that?
Always, always.
So yeah. So where was
Biden.
Okay, so Biden has all but isolated us from Saudi Arabia. So all that Saudi oil that was going to us, like 20 years ago, is now going to China, right? They have their new, so like we have less leverage against a lot of countries because of a weakening position that we have in our energy policies. Um,
Also, in our monetary policies, one thing that I wanted to talk about with you today is something that I am paying attention to is China and Brazil starting to use their own currency and ditching the U.S. dollar. Now, for me, that means higher gold prices and more interest in mining. What does that mean in the energy industry?
well, I think that's more of a red herring right now.
Okay.
I don't think you're going to replace the petrodollar.
Okay.
I don't. It's.
Fair
I
enough. Yeah,
mean,
yeah.
if we're doing this podcast in 10 years, then perhaps that might change
Yeah, yeah.
depending on how things go. But right now, there we have the most stable currency in the world.
I very much agree. I don't think that the dollar is going to die.
Like it's worrisome. Like don't get me wrong. Like you don't want a trend to turn into an actual like
Correct. Yeah.
catalyst.
But you're right. The dollar is so strong that even if it takes this little hit, it can survive.
Sure.
I mean, I think it's 70% of all foreign reserves are denominated in dollars. I think that's the
Yeah,
statistic. Can we
something like
get
that.
can we get the number up there to
Right. Well, you're the
exactly
one
what
with
it
the
is?
laptop.
I don't want to look it up right now.
But the point is, we've been very aggressive
Yeah.
toward foreign energy companies or foreign energy powerhouses like Saudi Arabia. Last year, while we were blaming the Saudis for higher oil prices and for all of our problems, we released an historic 180 million barrels from the SPR, right? But there was kind of this handshake agreement with the Saudis that like, hey, we're going to release all this oil and we're going to try to save the day, but we're going to refill it next spring, right? And we're going to buy it from you. And so that's what prevented the Saudis last year from actually cutting production again. Because I mean, they want higher oil prices. If we suddenly flood the market, then they're just going to cut their oil production. They can beat us in the long run. Okay, and I'll get to that in just a second. But right now, the about a month ago, the time was due to start refilling. Like we oil prices had actually fallen between that price range that Biden had set, and yet we didn't really do anything with it. And now oil's back up to $80, well above that price range. And so, and I believe it was some energy advisor to Biden came out a couple weeks ago or last month, and essentially said, "Hey, let's pump the brakes a little bit. We're not going to refill this SPR thing too quickly, and we can't really start probably for a little while." That must have been a slap in the face to Saudi Arabia, who just assumed that they were going to do that. And so that's where the retaliation came from. And they just announced a surprise cut of a million barrel of like I think 1.3 million barrels per day.
So they cut because we didn't buy the oil from them for retaliation.
Right.
I don't know if I blame them all that much, to be honest with you.
Right. And normally, if this were 5 years ago, I wouldn't have a problem with that because 5 years ago, U.S. oil output was on a was climbing. It was on a really high
13 million barrels a
trajectory.
day?
2019, just before COVID, like lockdowns hit us, it was at about 13 million barrels per day. Now that plummeted, right? And the idea was that within like so the idea was that after COVID, right, after the lockdowns were over and the economy started going, and by the way, our economy is going a lot better than what I think what the headlines are saying, you know. So demand is higher, but over the last say 2 3 years, oil production has rebounded, but we are nowhere near um, the 13 million barrels per day. We're at 12.2,
Will we get back
and it
to
actually
13, do you
trended
think?
lower over the last couple like weeks, I
Oh, so
believe.
it's going lower.
Well, it was we broke above 12, then it was about 12.3, 12.2. You know, we're right around there. But nobody is expecting us to get back to 13 million barrels per day unless people are just wishful thinkers, right? The CEO of Pioneer Natural Resources himself said we're never going to get back to that 13 million barrel per day peak. And the reason is because the US shale boom is over, right? It's done. We're in a different phase right now where it's more mature, it's not growth oriented. It's more we're gonna make money on the barrels that we have. We're gonna do drilling. We're gonna do a lot, but it's not gonna be at the frenzied pace that we're gonna just take on enormous loads of debt like we did 10 years ago. You know, you have a much more fiscally sound and disciplined oil sector in the US now. And that's a massive difference. And so while OPEC can cut, in the past, we could have just been like, well, yeah, but who gives a shit because US oil production is just going to keep going up. Now we're in a position where US oil production is not going to go higher. And so that's going to create a lot of problems. You're going to see them this summer when, I mean, right now we're seeing higher demand in oil. higher demand in gasoline, higher demand in diesel, right? And we're below the 5-year average on inventories of oil, diesel, gasoline, right? So we're headed, not right now, but we're headed toward a very bad payday, which is going to be uh, higher gas prices. If you thought last summer was high, it's going to be interesting. It's going to be interesting what demand does. Now, going to caveat all this and say that there's obviously a lingering catalyst that can just rain on everybody's parade, and that would be a major recession, right? That's the only thing that's going to keep us from. That's only that a major recession right now is probably the only thing that's going to keep us from exorbitantly high energy prices this summer and heading into the back end of 2023.
Okay, so big picture, geopolitics, supply, demand, all of this is gold prices, pushing oil prices higher, and the only thing that can stop this is a recession. So we're kind of damned if we're
But we're not
due.
seeing a recession,
We're not seeing
which
it
is interesting.
yet.
We're seeing a whole bunch of bank failures and a full blown banking crisis, and yet we're seeing uh, U.S. GDP still growing. We're seeing Chinese GDP growing at 2.2%, which is massively higher than the previous quarter. So like China is just starting to get underway. So it's not just about U.S. demand because you got to think, about globally, right? So like China and India are going to drive oil demand higher over the next couple of years. Like there's no getting around that. Um, yeah,
So, I mean, what I'm getting at is this seems like a pretty big opportunity.
sure.
It's like for investors, like with everything, we have all the factors that are going to drive oil prices higher. And if it doesn't happen, you're in a recession, which
Right.
is just that's
Well, I'm on the side that I think we're going to have a very very good second half of 2023 for oil stocks. Um,
for oil stocks
Now,
specifically. Or is that
particularly, I mean,
okay?
I have
Particularly,
my
I
favorite
got you.
homegrown Permian drillers that
Okay.
I almost never want to ditch them, right? But because right now they're in the mode that they're just churning out cash. Diamondback Energy was profitable throughout the pandemic, right? They never went negative, and so companies like that, I think we're going to see a lot more strength from refiners, because they're going to be pumping out all that gasoline and diesel that we need. I think an underdog to take a look at will be Canadian oil. Um, I don't think Canada gets its due considering it's our largest source of oil. And it's got that crude oil, that heavy crude oil that the refineries in the Gulf just crave.
Are we going to be talking about the oil sands again soon?
I'm sure we will one of these days. Over the next weeks and months, right? We're going to see, and you can mark my words, we're going to see a huge run toward M&A activity in
That's
the
actually
Permian
what
Basin.
I was thinking of. Yeah, that's exactly
Coincidentally,
what it was. Yeah, yeah.
um, right now Exxon is in talks of buying Pioneer Natural Resources. Right, Pioneer Natural Resources is the largest operator in the Permian Basin. They're a massive independent oil company, and so you have big oil like Exxon, Chevron, all these guys. They're always late to the party, and they don't grow their business through the drill bit.
They
What
relate to the
they
shale
they
industry.
buy their inventories,
Okay, yeah.
right? And so I think that once this deal happens, right, and I'm pretty sure most people think it's going to happen. Personally, I think Exxon is better off buying more B tier companies, something like Denbury Resources, maybe. But it's interesting that if whatever deal goes through, there's going to be a massive buy from Exxon, right? That's going to it's going to spark an M&A spree.
So you're focused on these B tier, these like I guess
No,
there's
I'm just saying, instead of ponying up, like a shit ton of money for Pioneer Natural Resources, I think they're better off going for better value down a little bit lower. They won't have to pay like the premium that would come with Pioneer Natural Resources.
gotcha.
Although buying Pioneer would be an absolute statement by ExxonMobil, in the Permian Basin.
And so what type of companies are you looking at for energy investor? Are you looking for those B tier companies or
Well, we look at the independent operators that are smaller cap. Small mid cap. I don't really like buying big oil. I'm not really huge on buying offshore. Exxon just abandoned a multi-billion-dollar project in Brazil. They just up and left for offshore Brazil development. So right now, if we're not talking Russian, Saudi Arabia, and OPEC, we're not talking OPEC plus. The only growth outside of OPEC plus is going to be a little bit in the U.S., a little bit in Guyana, and then maybe a little bit in Canada, and you got nothing else. So again, like what I was saying before, like how we don't have the growth that to take care of or to battle Saudi cuts anymore. So it's going to get interesting for sure.
It is going to get interesting. Keith, well, I want to thank you so much for being here today. Um, Please come back again soon.
I'm sure I'll see you in 5 months.
5 months. Anyway, that's it. Take care, guys. Please be sure to like, comment, and subscribe. Take it easy. See you next time.